Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Tech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. And certainly moving into this week, financial markets are in a bit of a consolidation mode, and that's ahead of a significant week packed of US data that could move markets. Now, this data this week is sort of squeezed into probably 3 days mainly, but that's because of the 4th of July public holiday on Friday, which has actually brought non-farm payrolls forward a day into Thursday. So that's what you've got between Tuesday and Thursday. You've got a whole load of data that could be creating volatility for financial investors, and certainly that's why I believe that we've started off the week in a little bit of consolidation mode. But certainly the focus, as I said, will be on the non-farm payrolls, but also Janet Yellen speaking on Wednesday evening as well. In terms of Iraq, the situation continues to really escalate in terms of geopolitical wise, but it doesn't really seem to be making too much of an impact on the equity markets, and perhaps it's in the bond markets where we're really seeing the tensions play out a little bit more. You've seen in the last week or so that the bond yields on treasuries, gilts, and also bunds have come down fairly strongly. And that might be showing that the bond markets are seeing something that perhaps equity markets are not yet. So it's something to keep an eye on perhaps there. Okay, so in terms of the FX markets, what are we looking at in terms of the key levels that we're looking at for this week? Well, the dollar has significantly deteriorated in value recently, and that certainly has had an impact on the likes of euro dollar, cable, and also dollar yen. And there are some key levels that the markets are coming up to. You've got $1.3670 on euro dollar, and that is an incredibly strong resistance that financial investors will be looking out for. You've also seen cable recently push above $1.70 to multi-year highs, and also dollar yen come back towards 101.30. Now that 101.30 level on dollar yen has only been reached on a closing basis once in 2014. So if we close back below that level, I think that could significantly mean that we could be open for some further weakness. Okay, so in terms of the other FX majors, there are some key levels there also that we're looking out for. You've got the Aussie dollar that's coming up towards the 94.60 mark, and that is a key level there. And also on the other major crosses, you've got on the CAD, the Swiss franc, and also the Kiwi dollar, also some key levels that have been breached. So the dollar is now beginning to take out some of these key levels, and it'll be interesting to see if the euro dollar, for example, is the next one to be taken out. So a lot going on in the FX markets this week. In terms of the indices, again, there's not really been too much of a correction. Certainly the S&P 500 is actually held up pretty well. But if you look at the charts on these indices, you've got a series of bearish key one-day reversals, which are fairly strong sell signals on the markets. And that's happened on the S&P 500 and also the DAX. Now, in isolation, you wouldn't be wanting to sell straight away with that. But I think it's just an early warning signal that the sellers are ready to come back into these markets and take some profits out of them. So you've got to be careful on that. On the S&P 500, you're looking at resistance at 1968. The DAX has already corrected slightly back from that 10,050 level, and it looks fairly corrective already. But the one that continues to underperform and disappoint is the FTSE 100, and the FTSE 100 is already back towards its key uptrend support and is testing it. So that 6,700 level on FTSE is that support area where that begins to come in. So a lot of key levels around there. Okay, so in terms of gold, where are we looking at? Well, gold had that big jump higher over the past couple of weeks, but it's sort of now come to a consolidation phase, and it's sort of run out of a bit of momentum to the upside. And considering that the dollar has been so strong over the gold prices, so that the dollar has been so weak over the past couple of weeks, I think that's a bit of a telling signal, and I think that could suggest that in light of the fact that the physical buying demand above 1300 has apparently not been there too much, I think that could be a signal that this rally may be running out of steam a bit. So is this a time to sell perhaps on gold? Okay, so what are the key events we're looking at for this week? Well, we've already had this morning with the Eurozone CPI data that came in line with expectations, and so we're looking now towards the manufacturing PMIs on Tuesday. These will give an early indication of how June growth is going, and they are the first real forward-looking bit of data that we're going to get. And then we're pushing on to the ADP employment report, which some would say would give a bit of an indication onto non-farm payrolls, but it doesn't always work out that way. 200,000 is the indication that we're getting there. And then on to Wednesday evening, we've got Yellen, who gives a speech to the IMF. Now, the chances are that she's not going to make the same mistake that Mark Carney of the Bank of England has made recently, where he's been flip-flopping a little bit around on monetary policy guidance. She's likely to remain fairly dovish, and I think probably still steering towards a Q2 2015 before we're going to start to see the beginning of the tightening cycle by the Fed. Okay, so on to Thursday, we've got the service sector PMIs, which are always important, certainly for the UK, and then we're looking at the ECB monetary policy statement, which, to be honest, is not going to have the impact that it has had in recent months. But certainly the market will always have a look at that. But then at 1:30 on Thursday afternoon, you've got both Mario Draghi's press conference for that ECB monetary policy and also non-farm payrolls. So you could see a lot of volatility around that time Thursday afternoon. So that has meant that on Friday you've got a public holiday for the Independence Day in the States. So you could have a little bit of a bit of respite on Friday. So these are the key things that we're looking out for this week. And in front of that, I wish you good luck in your trading, and I will speak to you next week. Thank you.